What's going on, everyone? Gilman with Live Wealthy Stocks back with another video today, taking a look at the VWAP, which is volume weighted average price. It's a line that I use on my daily analysis, and I know some of you guys had questions on, what I use, how I use it, what does it mean, how to interpret it, all that good stuff. So I figured I'd make some videos to take a look at, VWAP, EMAs, SMAs, other points of support and resistance. So if you're new to the stock market, or maybe someone that's looking to get a little bit more technical, you have these videos to watch. That way when you're watching my videos, you can really follow along and take advantage of kind of what I see, and hopefully you guys can use that to apply to your trading and investing as well. Again, this is stuff that I see. You don't necessarily have to use the VWAP the same way that I do, but we'll kind of go over what it is. So let me hit record on my computer and we will get right into it. Alrighty, so let's take a look at, what does it mean? What's the difference in average price and volume weighted average price, right? So let me just open this real quick. Let's take, AAPL for example. You're buying Apple shares. Let's do whoever's watching this video, and then Gilman, which is me. So we'll do share price and we will do volume, which is how many you've bought, right? So let's say you go in, let's say Apple was trading at 122, the bottom was 121. So let's say you go in and you buy it at 121. We're going to keep this example kind of simple, just so people can, not really have trouble following along, because I know numbers can get kind of funky and I don't want to deal with crazy numbers. Actually, let's make this 120 just for easiness sake. And then let's say Apple is rallying and I buy in at 122 and I buy 5 shares. Okay, so what have we bought? So amount is going to be 120 times 3, right? You've spent this times this, so you bought yours for $360. I bought mine for a little bit more expensive. You got a better deal than I did, but I bought mine for $610. So if we were to take an average price of this, right, we would simply get average of these two. No, I don't want sum. I want average. I'm so used to using Excel that this is kind of hard for me to use. Excuse my Mac, Excel, whatever it's called, troubles. There we go. Okay, so the average price that we paid was 121 for these shares, right? But now let's do a sum of these two, right? And a sum of these two, right? So let me actually cut this and paste it right. Oh, darn. So this number here is the average, right? So keep that in mind, that 121 number is the average, and this is the quantity, and this is how much we've paid. Volume weighted is simply going to take this divided by the amount, or the amount divided by the quantity that you've purchased, right? So notice that the volume weighted is going to be 121.25 because I bought more volume than you at a higher price, and the middle of 120 and 122 will be 121 because I bought more at the higher price. It'll be closer to the volume weighted version of it is going to be closer to my price, my higher price. Similarly, if I bought more at 118, the price was going to be closer to 118 than 120. It wasn't going to be 119. That's what volume weighted does. It kind of takes into consideration how much volume is bought and what the price it was bought at. Because let's say I buy 1 and you go and buy 100, right? The price will still be, or the average will still be 121, right? But if you bought 100 at 120, the volume weighted price will be a lot closer to 120 than 122 because your 100 purchase will count a lot more than my 1 purchase. So hopefully that helps you see kind of what the volume weighted sort of does to it. And now we'll take a look at how I use it on a daily basis, right? So I use VWAP to kind of see how strong a stock is in any given day. Intraday only. It doesn't tell me a lot about what's going to happen tomorrow to the stock, although it sometimes can. But in Apple's case, right, this isn't a good example. This is also not a good day to kind of show it, but this is a good example, right? So when Apple went down right here, it was below the VWAP, which means it was trading at a lower than average price at that given point. When it went up, it bounced off VWAP, went up, came down, bounced off VWAP again, and then for the rest of the day, it was above VWAP, and the gap sort of increased throughout the course of the day, right? So VWAP down here was at 122, we were trading at 122.79. Here the VWAP was at 122.25, we're trading at 123.37. So we're trading above VWAP, which means Apple is strong that day. So it can be informative in that it tells us whether or not Apple for that day is strong or weak. The other thing it can do is it can be somewhat predictive. Now this doesn't work all the time since it can break through VWAP, right? But when Apple, right at the gate on, let's see, this is 12:01, so December 1st, just a couple days ago, dropped, right? It came out the gate at 121, dropped to 120.01, then went all the way up, right? And we were looking at this 120.50 level, but also the VWAP. So it went up all the way to 122.92, so a quick almost $3 jump in a matter of minutes. Came down, and guess what? Since it's above VWAP, it bounced right off of VWAP, right? And then pushed up, and then came down, and then went up, and then came down. Guess what? Again, it bounced right off VWAP, right? So it can be predictive in that it can tell you if a stock is, if this is the VWAP and this is the stock can come up, I'm probably not doing it, yeah, stock can come up and it can hit VWAP, and if it's strong enough, it'll break through, right? It'll kind of keep going up. If it's not strong enough, then it'll kind of go down. And similarly, if this is VWAP and the stock is up here, it can go bounce off VWAP like we see with Apple here, or if it's not, if it's like really weak, then it can just kind of break through. Let's take a look at Zoom, since I think it did the same thing. Yeah, so Zoom, right, when it shot up on Friday, it went from, you know, right trading at VWAP, below, above, shot all the way up to 418, and then slowly trickled its way down. Guess what? Bounced right off of VWAP, went up, hovered around VWAP, broke below it, and then was below it for the rest of the day. What does this instance here show us? The reason I personally like looking at the VWAP is if a stock is, let's say, you know, you come in and you're looking at Zoom at 11:15 and it's right around VWAP and it pushes up here to 415, and now the VWAP is still at, you know, 411, and the stock is at 415. What does that mean for the stock? I mean, you can use what I just said and say Zoom is strong for that day, but does that mean you should buy into the stock? This is probably, to me, the best reason to use VWAP because of what it truly is, right? It is the average price using volume that the stock is traded for in that day. And what does that mean? That means that if a stock is super separated from the VWAP, there could easily be mean reversion, right? Which means it could come back right to that average price. If I am here and I bought in at 411 and it's at 418, I'm already up like a 1%, 2%, which to us isn't a lot, but for people trading with huge amounts of money, right, that can really sort of not determine where a stock price will go, right, but kind of influence it, right? If someone comes in with millions of shares, right, that's definitely going to drive the share price of it up. They're up 1% or 2% already. For a day's worth of work, that ain't too bad, right? They start selling and then we revert to the mean, right? People see that we are far from the VWAP, start selling, and not only did we sell to VWAP, we broke below it and kind of ended not too far from this level 408 that we had started the day with and the low point of the day. I could give you so many more examples. I was watching Fastly, right, on Friday. Stock zoomed up from 82 all the way to 97, ended at 88, right? So similar thing. Do you want to buy the stock right here at 94 when it's so far separated from the VWAP, right? That's the consideration. Now, you could come back at me and say, well, Gilman, what about 91, right? 91 is still separated from the VWAP, but it continued from 91 to 97. Absolutely, right? And you can jump on with the difference in the VWAP being there, and it can continue the ride up. But as we see from this day, it sold off, and we ended at 88, which was only up $5 for the day, when we had gone up to 97, which is $9 more to the day. you will find cases where a stock can be above VWAP for a while and it can be fine. I'm not saying it always has to come down to the mean. I'm not saying bet against a stock that's so much higher, right? If a stock has strength, it definitely can do that, right? Let's take a look at Slack. I've not actually looked at Slack in terms of VWAP. So a lot of times a stock will also do this, right? So not only will we see come up, bounce off VWAP, come up, bounce, but sometimes it'll just kind of hang out by the VWAP and go sideways. Totally normal thing for a stock to do, especially one like Slack that has ran up a lot in the past few days or weeks. But again, right, go up, come down, tests VWAP. So if at this point you see it coming down, what is the first level that, you know, if there's an EMA or previous level of support resistance, obviously that can be there too. But VWAP is a good point of bounce for a lot of stocks, right? So as we see it held up there, it kind of hovered around the VWAP there and then broke below it, right? So when we can see a bounce, we can see it hovering around it, going below it and above it, below it, above it, or it could just break through. Now I'm trying to go back to the day. So here clearly the day before, right? What we see is we're below VWAP. It's hitting up against VWAP, hit, 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 and then the distance just increases. So we don't see that VWAP break necessarily, but what we see is a hit. That means the stock doesn't have enough momentum to break through the VWAP. Relatively weak in my opinion. This is kind of a sideways day, right? Above, below, above, below, above, below. Above, right? Barely above. This is nice. It hits up against VWAP a couple times, hits it there and then pushes up, hits it there, and just kind of trades sideways. A relatively strong day. But I mean, these are just some examples of you know, the stock and what it really can do. What we see here was, I think this was the day that the news when news was announced, so it went from 29 to 38. But one thing that I do want to point out is take a look at that VWAP, right? The VWAP also went along up with it because we got a lot of volume. When people saw the Salesforce Slack being acquired by Salesforce, the volume also came in. So VWAP pushed up. So when it went up, although it went up from $30 to like close to $40, a 20-something% jump, it wasn't that far away from the VWAP because the volume aspect was there. So as the stock was going up, we also had volume, so the VWAP was going up as well. I know I talked for a really long time, but I kind of wanted to point all the examples of how it can be informative, right, of how the stock is weak or strong. You know, you guys know that when I'm looking at my Apple, Tesla, whatever company I'm, you know, kind of taking a look at for stock analysis, I like seeing if it was weak for the day or strong for the day. And during the day, right, I kind of use it as a predictive sort of way to look at the stock where, you know, we saw it bounce off of this line that we had drawn for Apple. The next point I was looking at when it was coming down was VWAP. Sure enough, we did get a slight bounce and then we kind of broke below it. And then for the rest of the day, we were kind of, you know, playing around the VWAP. If I kind of zoom out, it was trading very close to that. That's how I like to use it, informative, predictive. And I think it can really, you know, tell me a lot about a stock. It's helped me get out of quick in and outs from trades as well. So yeah, I thought I'd share. I know I talk about it a lot and a couple of you guys had asked questions on it, but let me know what you guys think. If you guys found this video helpful, subscribe to my channel and like this video. That's all I ask of you. I'm not selling a course, not trying to get you to join anything that I have to sell right now. But yeah, hope you guys found this video helpful. If you did, you know, drop a comment. Let me know if you understand it better now. I love hearing comments like that as well. So hope you guys are all having an amazing weekend and found this video helpful. Let me know if there are any other kind of topics you want me to cover. I will cover my EMAs and SMAs and points of resistance and support and kind of the narrowing ranges that I talk about all the time as well at some point as soon as I have time on those. But yeah, hope you guys are all having an amazing week. Let's remember to be a bit better every single day, and until next time.